for you this afternoon. I'll say that again. We have an exciting agenda for you this afternoon. This is BII's 2022 Annual Impact Report and highlight for our broader stakeholder community. And you will see Aliana, I'm going to give some short remarks just to give you an update around what's happening at BII. And then we'll have Aliana facilitate a conversation with one of our newest portfolio companies, Envision, and we have Tatiana Little here, and we're super excited to share her story. And then Aliana will share her learnings and highlights from the impact assessment from this past year. Henry is also going to provide an update on our portfolio, and then we'll open it up for Q&A. So while we gave ourselves 90 minutes, we may not go the full 90 minutes. We encourage you, we want to give you space to ask questions and have time to go deeper. But we will keep our program to about 50 minutes or so. Now, earlier this year at BII, we refreshed our strategic vision to focus on 3 program pillars. One was delivering on the promise of Fund 1. The second was shaping and launching our Fund 2. And then building the field of impact investing through our education, and namely through our cohort, our card deck programs, and policy and advocacy. So on Fund 1, we have fully deployed Fund 1, so excited to share that we've invested over $7 million into over 353 investments. Henry will give you more of an update on that. But we're actively paying our investors back now, and we're building our technical assistance resources to support our portfolio, especially during this challenging time. And then on Fund 2, I know a lot of you have been waiting to hear more about what is our second fund. Now, some of you have asked to renew your notes or opportunities to invest again. So the good news is that we have spent the past couple of months shaping Fund 2. We will be launching in the fall a $20 million integrated capital fund. It will be a debt fund that will double down on our thesis of investing in racial justice, with a focus on what we call new majority entrepreneurs. This is the shift in demographics in our country, where people of color, Black, Latino, Asians will be the majority by 2045. And what we want to support is building power, economic opportunity, and social justice for these entrepreneurs. And we have an added component of also in this fund supporting community-owned real estate or community-controlled real estate that prevents displacement. So really excited about the new direction and the thesis of this fund. And we will share more as we shape our offering memo. We can't provide too much information, but what we'd like to do is, for those of you who want to learn more about the second fund, we'd love to get your name and email. You can email me directly, or you can put it in the chat, and we'll add you to our list of interested potential investors, so that as we start to put out marketing materials, you'll be the first to know. And then wanted to share a little bit about what we're doing in building the field. So as you know, we had held a cohort program for over 33 fund managers between 2020 and 2021. 8 of those cohort funds will be launching this year. And we've gotten so much interest from other emerging managers for education and support that we'll be launching a mini cohort of about 5 emerging funds. I did want to invite Deborah to share a little bit more about what she's doing to support the funds. There's just a lot of exciting work happening there. Deborah, could I ask you to just do a quick plug about what's happening with our cohort funds?
Sure. So as you all know, the cohort ended actually October 2021, and we've never been together in person during that crazy ride, but we are gathering in August in person in Minnesota, which people are really excited about. So the first time being together. Betty mentioned 8 emerging funds. They are all at different stages. They all have pilot funds running. They all have different stages of drafting their offering memorandum. Some will be launched before the end of this year. Some will be Q1 next year. And we're also working on a vehicle that I can't say a lot about yet, that will allow us to aggregate money in. So larger amounts of money can come in and get funneled through them to these small funds. So when that's announceable, we'll share that with you. And this mini cohort, there are a lot of other folks out there who said, will you do your other cohort again? We're like, no, we're not doing that whole 18-month long program. And all of a sudden, we're going to do a mini 4-month intensive, as Betty mentioned, for 4 teams. And so if you know folks that are trying to create funds, so emerging BIPOC and women fund managers, doing place-based integrated capital funds, community-based funds, essentially, that we can use some of our tools and templates and knowledge for, let us know. And we have room in this cohort that'll launch August 1st. And we may do more mini cohorts. I don't know. We'll see how this goes.
Thank you so much, Deborah. Yeah, there's so much excitement about just the growth of the impact investing field, and we have done it. We've done it before, and we want to share that knowledge. So thank you so much, Deborah, for sharing a bit about what is happening there. And then we're also continuing to educate the field, so other fund managers, foundations, impact investors, on how to use integrated capital to address racial justice, economic justice issues. And so we piloted a couple of games with different teams, and we started 2 public games. We had one last week, and we have another one tomorrow. This is a chance to play with our integrated capital cards and to learn how to use different financing tools in the context of an actual case. And so if there's anybody interested, I know Shaka, you came to the one last week. You could do a plug for us. If there's anyone interested in joining us, it's tomorrow at 11:30, and we'll put the link in the chat if you would like to register. It's a chance for you to use the cards, learn about the card game program, and then maybe see if this is of interest to your broader community. Another thing we are just really proud of is we've been working with one of our partners, Lawyers for Civil Rights, on a just lending project. And that was to take our existing lending documents and to simplify them, to make them more entrepreneur friendly, but also to test ourselves and push ourselves to take what we call our trust-based, relationship-based lending model and actually reflect it in our legal documents. Because lawyers are all about protecting the lender, right? And this was about how we take what we often view as, and I've practiced law for many, many years, and I'm always of the one, well, this is how it's always done. And this is what needs to be in there. And you have to have the most protective clauses, but it's not actually reflective of the relationship that we have with our entrepreneurs. So really proud to say that working with LCR, with Ropes and Gray, and some other firms, we've completely reshaped what this lending document looks like, and we're going to get ready to roll it out in our next debt investments to see how it works. And it's about empowering our entrepreneurs and reflecting this trust-based lending model. It also is about shaping a new crop of lawyers, a new generation of lawyers that can support impact investment funds. So we just got an award from LCR, and we'll paste our little program book in the chat so you can see what it's about, but we got the Founders Award from them in recognition of this work. And then finally, we are continuing to do our advocacy work on increasing funding for entrepreneurs of color, namely through the Coalition for an Equitable Economy, which is a Massachusetts-based effort. It's a coalition of over 100 organizations that support the ecosystem for entrepreneurs, and the goal is to create a more inclusive and equitable economy for entrepreneurs of color. That group, which BII is a founding member of, and I sit on the steering committee, we've been a really key player on advocating for the Massachusetts legislature to allocate $300 million of support for small business recovery, and that's through the ARPA funds that have come into the state. And one of our goals is to continue to secure funding to provide entrepreneurs with grants to help them recover from the pandemic without requiring them to take on additional debt. And this advocacy actually led to this most recent $75 million grant program through Mass Growth Capital. Some of our portfolios were able to get these grants, and they continue to provide stabilization as we go through this difficult time right now in the economy. The coalition's also launching a small business survey to understand the diverse needs of diverse small businesses today, and that actually will be used as a tool to shape programs, identify additional capital needs and other resources for entrepreneurs as we shift into a new administration this year. So as you can see, BII plays this really unique role, both as a funder, but also as an advocate for our small business community, the issues impacting them, and then the way we grow and proliferate a new way of investing and supporting entrepreneurs of color. So with that said, now like to transition us to the heart of the program. I'm going to welcome Aliana Piñero, our Impact Director, to introduce our special guest.
Thanks, Betty.
Welcome, Aliana.
Thank you. Great to see some familiar faces and on today's call, and happy and excited to share what we've been doing at BII. Today we have Dr. Tariana Little, and she is here today because we have just created this amazing relationship. We've developed this amazing relationship with both with Tariana as an individual and an entrepreneur, but also with Envision. BII invested in Envision last year, and then also made a follow-on investment this year. And then we've also been working on we did a workshop last year for our entrepreneurs, and also have done a storytelling project of our own with Envision this year. So I'll let Tariana tell you a bit more about that later, but just wanted to say this has been like a beautiful and wonderful relationship with one of our entrepreneurs. So I'll just tell you a little bit about Tariana to introduce her first, and then we can just have this little fireside chat. So Dr. Tariana V. Little is CEO and co-founder of Envision Productions. And Envision is a media boutique that helps visionary organizations convey their value and their values. And so this organization works at the intersection of media, public health, and business. And Dr. Little holds a Doctor of Public Health from Harvard University, where she teaches about entrepreneurship and innovation. And she also serves on various nonprofit boards. And she is an emerging philanthropist in her native Boston. She's driven by science, storytelling, and social justice. Tariana's work embodies what she calls intentional creativity for social change. So thank you so much, Tariana, for joining us today. And I already introduced both you and Envision a bit, but I'd love for you to just, in your own words, like tell us a bit about Envision and how the company has impact through its work.
Thank you, Aliana. Thank you, Betty, for having me here. So the way I like to describe ourselves is we're a social justice media agency. I find that that's the best way that folks can wrap around, like all the things that we do. And we focus on social change and organizations that are promoting good in the world across all industries and across all sectors. We're a producer of media, we're a partner in causes, and also a philanthropist.
Excuse me, excellent. And tell me, I described a little bit our interactions, really over the last year and a half, 2 years, or I guess year and a half, but what role has BII's business support and investment played in Envision's development?
BII has played a crucial role. So I'm an accidental entrepreneur. I did not go to business school before funding a business. I did not have any specialized training. This was something that happened on a dare. While I was in graduate school, studying storytelling interventions for health behavior change. And now 10 years later, from the start of that journey, here we are, having a business that is thriving and that is growing. And BII came at a pivotal point. 2020 for us, yes, it shook us, but it also made us look within to say, what can we do differently? How can we be better? How can we step up and really leverage our platform? And that is where we doubled down on our social mission. That's where we piloted our grant program to give back to nonprofits led by people of color. That is where, we really thought about our business model and what other services we can produce. And BII was a partner that came to us through a referral. And, I had never thought about asking for funding. We had always bootstrapped. So to me, having to make a presentation and formally ask for money, that was just not something that I had experience in or wanted to do, but I welcomed that challenge. And so BII was a supportive partner. I thank Zach for the handholding, for the description of the process, for helping us to refine the slide deck and the guidance, and really explaining what the terms are, what the relationship would be, and really getting us to see that this was not like working with Bank of America. This was not working with a huge institution that had its own interests at the core. This was a relationship where it was mutually beneficial. And so through the loans the BII has provided us, through hiring us to actually partner with you and add value to the work that you're doing, and then amplifying our work, I think it's been very successful.
Excellent. Yes, and we're so pleased with what the partnership has, it's been a two-way relationship for sure, and we've been so pleased with kind of what the fruits of the partnership from our perspective as well. So you mentioned that you had kind of this pivot and this doubling down on the impact vision that you had for MVision. What does MVision's future look like? What do you see looking forward?
I'm more and more, now that we're going to celebrate 10 years next year, I'm thinking about how do we continue leveraging our platform? How do we become a thought leader or step into our thought leadership as an organization that has created its own storytelling framework, as an organization that centers racial justice, economic justice, that really thinks about leadership, community, and how are we hiring, compensating, supporting creatives of color, the type of work that we do, and why it matters, and sharing with the world, the impact of that. And also, this is not something, it's not public yet, but I'll share here. So we have actually created an endowed scholarship at UMass Boston, where I went to school for undergrad and grad school. So that is the first year of the funding cycle is going to start next year. So that's a perpetual scholarship that we have created for social impact work. So it's going to support graduate students that are doing innovative, impactful community work. And that's a life goal of mine that I now have checked off. And I'm excited for what's to come and being able to share that publicly in the future.
That's incredible. Congratulations, Tatiana. I didn't know that. So
it's under wraps. It's under wraps.
Yeah, I won't say anything. We won't say anything yet, right? We'll wait for the official announcement. But yeah, so exciting to learn of that. Anything else that you want to share? You have a captive audience here of some funders, some supporters, some philanthropists, community members, all who care about the work that we're doing here. Any like words that you would share before we wrap up?
It's critical that we as a community, that we harness purposeful capitalism, that we really question the norms that we have been brought up in and the things that we hold to be true, and say we no longer want to do those things. We no longer want to operate from this mode. We want a different world. We want a different path. We want different results.
Excellent. Thank you. We will quote you later on that. That's incredible. If anybody has a quick question for Tatiana, you could jump in or drop it in the chat. And if not, I will move us along. No, okay, excellent. Well, congratulations, Tatiana, on your success, and thank you so much for your partnership. It has been an incredible journey with you. One question we had from Karen Chamberlain: without BII, where would you be today?
Oof, oh my goodness. So we used the loan to buy a production van. So now we have an actual advertising on wheels that actually houses our equipment, allows us to be more efficient and effective at our work. And also we have hired our 6th employee. So it allows us to expand our work and really think about scale.
Mm-hmm. Excellent. Yeah, I feel really excited and privileged to be part of that journey and that growth, Tatiana. Thank you for working with us. Excellent. Well, I will take you off of Spotlight. Thank you so much for joining us today. Feel free to stay or to go. I know you are a busy person.
I'll stay on for a few minutes and then I'll go. Thank you.
Awesome. Thank you. Okay, I'm going to remove my own Spotlight as well. And if you all you can go back to gallery view if you'd like. I am going to take you through a few highlights of the impact. I thought it was so important to get just a story, because the reason why BII does what it does and the way that it has impact, the way that impact is generated in our communities is only through these incredible entrepreneurs that we work with. So I'm really glad that Tatiana was able to come and share some of that today. and allow us to take a peek into, what it's like for an entrepreneur on this journey with us. But I am going to get into some numbers today. I'm going to share my screen and just briefly kind of take you through. And the idea is, we'll dive deep into some numbers, and then I do want to kind of come back up and think about the bigger picture as well. So here is a look at some of our data here. So this past year, we just had an explosion in jobs in our portfolio. So as you know, we made $1.4 million in investments into 14 transactions. A few of those were follow-on investments, but we really had, it was over 260% increase in jobs. So that, the number of jobs, went from 350 total jobs, 100 jobs of employees of color and women of color in our portfolio. And this was, in large part due to the hiring that portfolios were doing. It had bounced back, right, from 2021. A lot of people really weren't back to pre-pandemic levels at the end of 2020. Of course, we were still in the height of the pandemic. And they also were not, some companies, by the end of 2021 had really actually figured out how to pivot and grow their businesses, which was just an incredible opportunity for a few of our businesses, especially in healthcare, and a few in education as well. Ownership, in terms of ownership of the enterprises by people of color, remained pretty stable at about 50%. We're talking about shares of ownership. And you can see here in green is ownership by women, and then women of color is in red. And that remained pretty constant. It was 49% the year before and 51% this past year. Our companies, the founders and executives remain mostly in control of their businesses. You see 68% of the companies are owned by the founder, of the shares of the companies are owned by founders and executives, although they are beginning to take on more external capital. And, we still don't have a ton of non-executive employees holding shares. And so we have been working with some companies to think about, what does it mean to, have employee ownership? What does it mean for companies to have their to offer options and other pathways to stock ownership in the companies, even if it's not a full co-op conversion. Just to dive in on the quality of the jobs, we are happy to say that the investments in our portfolio were contributing by compensation, over 55, almost $56 million through compensation was paid out to employees. And what I think is remarkable here and what's important here is that the compensation ratios are tight, right? They're not 6 to 1, 8 to 1. We have highest paid to lowest paid employees. These numbers are still tight. So we have around 2.8 to 1 is the high to low ratio, and very tight. It's edging up a little bit. I think this actually last year was slightly closer, slightly lower, but we have still tight ratios of highest paid man to highest paid woman, which is this in the beige, and then average man to average woman. And then I just want to highlight, that our companies really do strive to pay living wage, despite the fact that it has been going up and up and up, because the cost of living has been going up and up and up here in the Commonwealth. Across Massachusetts, the living wage now is about $22 an hour. By county, that's how we ask people to measure it. But they're about 84% of the workforce is at or above living wage. And the average lowest wage, because of course some companies are paying all of their employees above living wage, and some are not able to. We're seeing, it's just right around, it's pretty tight, and it's right around $20 an hour. So that's way above the approximately $14 an hour, which is the minimum wage currently in the Commonwealth. One thing that we don't really get into on the impact report, in our kind of public facing impact report, is the policies and practices. And I think this is always a place where we can provide some assistance with our resources and technical assistance to our portfolio companies. You can see that the most common policies and practices that are offered is flexible schedules. You have some form of participatory or participative decision making here, and 401ks. These are important pieces, but when we think about Corey friendly hiring practices and youth programs to sort of help, whether it be through internships or working with organizations that do workforce development for youth, this is very low. And so we're able to, in the conversations that we have with the portfolio companies at the beginning of the year, after they've taken this survey, we can go in and say, hey, have you heard about these different programs? Have you heard about partnering with, if it would be appropriate to partner with a nonprofit that kind of assists with Corey-friendly hiring of returning citizens, or hiring of youth. Those are things that we try to provide some resources for the lesser used and lesser known practices. You can see very common for companies. More than half the companies are providing leadership and skills certification, but a little bit less over here on sort of the more secondary, you would say, to the job types of skills that are still very useful, for the business, for the employees. And finally, this is a new question this year on environmental practices. And people are used to recycling, they know how to do that. They're trying to be energy efficient because it's helpful probably to their bottom line. But we only have a few that are targeting zero waste, that are even recycling organic waste, or looking at using different types of renewable energy. So this is a piece of our impact that we're looking to increase and work on, especially through both in the first fund as we provide technical assistance, and then also in the second fund. This is a part that we're going to be focusing on a bit. And then I want to just take a look here. One thing that we asked this year was, because it's important for us to understand how important is what we view as impact, how important is it to the companies? And we sort of categorized it in these different ways. Is it most important to you to have an impact on your customers and clients of color and communities of color? Is it most important to you to provide jobs in communities of color? Or is it most important to you to create wealth in communities of color? And we found that 40% of the responses came in that it was most important to generate wealth in communities of color. And then there was the second was generating impact for customers and communities of color that they're impacting through their projects and services, and then finally through jobs. So, and I just wanted to take a moment, we saw some data, right? We looked at some charts. Those those are pretty, and it's wonderful to think through, you know, to kind of distill down. But I would recommend and encourage you to look through the impact report itself. I'll drop the link in the chat, and I just want to share my screen briefly, because it really is. Oops. I should have asked somebody else to drop it in the chat.
I'll drop it in the chat for you.
Somebody else to drop it in the chat. I'm multitasking. Here we go. A lot of what we've, you know, talked about today, you know, but just the stories of it. And I think that's a really important piece. And so I, you know, while I get very excited about the data, you can come here and you can, you know, learn about Envision Productions and their social impact storytelling framework that Tariana was just telling you about. This is a video that they produced about their own work. We have some wonderful quotes, important portfolio highlights and happenings over the last year that are here. And another great video also produced by Envision Productions on a Latino brewery opening in Hyde Park later this year. You can take a look at some of the data that we just went over today. And then also, you know, you can take a look at some of the wonderful things that happened in the 18-month fund building cohort. I saw that we had Kepra Institute on the line as well. Hey, Pambana. And, you know, you can learn a bit about what's going on at Native Women Lead and the other Black Farmer Fund. Shaka's on the line as well, Urbane. So I would just really recommend that you take a look because what I just talked about in the numbers, while it's exciting and important, it's also really exciting the breadth of the impact that we're having, you know, not only in our community, but across the country. And Betty touched on a bit, so I won't right now, but Betty touched a bit on some of the collaboration and work that we've been having and doing in the field and contributing to the field. And so, yeah, I just, you know, do take a little time to peruse when you have a moment. I can take a couple of questions now if anyone has anything specific. Pambana had a question. Since the majority of Black businesses are sole, I don't know if this is true for BIPOC businesses, what is the average number of employees? So it's a little bit skewed. That's a great question. She asked what the average number of employees. I think, you know, if I just did the math off the top of my head, it would be very high because there was one company, or there were two companies that had like 400 employees last year, and then others that like really much less. You know, I think I'd say that there's a wide range, right? You have some like Envision that are like, you know, a kind of healthy, you know, 5 to 10 employees, and then others that, you know, because of the work that they're in, whether it be, you know, Beantown Builders or another construction company that we have in our portfolio that is escaping me. You know, they have many more workers just because they're, you know, the nature of their work, and so they might have, you know, 30 workers on their payroll. But I think, you know, we have had a few sole proprietors, and we do, like, even last year we made one investment into a hot sauce company that is was a sole proprietor, and he's brought somebody on, Hillside Harvest. But it's generally been companies that are building and do have at least a few employees. So, but it's really, it ranges all over the place, Pambana, to be honest. Any other questions? If not, I will hand it over to Henry.
And please put other questions in the chat. If anything else comes up, we'd love to. Oh, we do have another one here.
Great question, Adam. How do your investments break out between, quote, professional companies and companies like contractors, hair salons, and cleaning supplies? Let's see. I mean, I do have a quick chart here that might be useful. So we're sector agnostic, as you probably recall, and so you can see here, you know, there's one construction company that's actually in here, in environment and energy, just because of the type of work that they do. I'd say we're more skewed towards professional services, but we do have, you know, some of our larger investments are in two manufacturing facilities and a few other kind of more. There's a couple of small food businesses, but we're slightly more skewed, I'd say, towards the professional companies. How might Fund 2, Andrew's asking, how might Fund 2 be similar or different than Fund 1? Let me stop share. Deborah, you can wave your arms at me, or Betty, you can wave your arms at me if I should stop talking. But one way that it will be different is that the companies must have BIPOC ownership, must have ownership of people of color. We're really focusing on the new majority. We're focusing on founders that are not white. And so while we did have some companies in the Fund 1 that were owned by white founders, but then had like significant impact either through jobs or through product or services in communities of color, that won't be the case for Fund 2. We're drawing that distinction. And then I'd say another is we're sort of really trying to focus a bit more on this company, is there some systemic problem that they're working to solve? Is there something that they're doing really differently that's providing big opportunities for people of color? So you won't, so you probably won't see like a bakery in the next fund. I don't know if you want to add anything to that.
So Andrew, the second fund, it's still going to be sector agnostic, right? So we're not only going to focus on one or two sectors, but it's the broader thematic focus around driving systemic change, right? So there are companies working on increasing diversity in the workforce or addressing racial or economic gaps, right, in a particular community. That could look like a fintech. It could look like an ed tech company, right? I would say there might be some additional ones that use or leverage technology to scale up their services. There's also going to be a broad focus around building climate resilience in communities of color. And so that could be a construction company that's doing environmental remediation to, a company supporting energy efficiency audits and retrofits, all the way to, maybe a company working on water technologies, right? So it might be very diverse in terms of the types of businesses and the sectors that they cross into. And then on the small business side, the other focuses on supporting businesses that are trying to drive employee ownership, cooperative ownership, or unionized workforces, right? So the business model is also something we're going to be looking at closely. And then, as I mentioned, the other piece, which is, about building, you saw this in the data, like building BIPOC wealth is also supporting community ownership of real estate or community control of real estate. One of our supported organizations is City Life Vida Urbana. They're very close partners with us and have identified, tenant-controlled buildings that one day they may have an opportunity to acquire or may need as a defensive mechanism because the building may be sold to a speculative investor, be able to, get enough capital to buy the building and then manage it themselves. So there's sort of a broader conversation, and I mentioned the Coalition for an Equitable Economy because there's this broader conversation of how do we use real estate and ownership to build BIPOC wealth. And part of it is supporting models of community ownership and control. Another is to take, big developments by mainstream developers that now are creating a layer in the capital stack for people of color to be able to invest. So these are just great ways that we're going to be able to, pilot some new things. There's one investment we're looking at now in East Boston that would be an acquisition of a portfolio that is coming back on the market that would allow the East Boston CDC to take back units, right, that were in sort of the mainstream market and now make them affordable permanently. And that will allow them to provide more family-focused, units, and that's a mostly Latino neighborhood. So those are just some ways that, this new fund will be, think of it as a systems change fund, power building fund.
Thanks, Betty. We'll have time for more questions at the end. I do want to turn it over to Henry to give you a bit of insight on the portfolio. Take it away, Henry.
Thank you, Aliana. And one of the comments that was put in the chat is the geographic focus for fund number 2 will be slightly broader than fund number 1, where we're looking at East Boston for fund number 1, and in fund number 2, all of Massachusetts and some of the northeastern states, so upstate New York, Connecticut, Rhode Island, and such. Right now, I just wanted to give you a quick highlight of portfolio's health. So as you know, we break down the portfolio into 4 quadrants right now: crisis, watch list, healthy, and very healthy or thriving. The companies in those quadrants have remained pretty steady from last quarter to this. Currently, there's about 2% of the portfolio is in crisis, and that's represented by 3 portfolio companies. 16% or 5 companies are on the watch list. 59%, 25 companies are healthy, and 22% or 7 companies are thriving. We've seen this stay pretty consistent. We did anticipate a few of the companies that are on the watch list to actually move off the watch list into the healthy area or arena. We continue to monitor them pretty closely. Right now, as we know that there are some inflationary pressures and there's a lot of talk about the possibility of impending recession, so we're really looking into strategies for supporting our businesses. The thought is that as we know from our previous experience, cash right now is really king with our businesses, or is king in general in making it through recessionary type of environments. So we're monitoring the companies very closely and talking to the entrepreneurs really around cash preservation, limiting or delaying some of their capital expenses. And we're really trying to support them from that perspective. In addition, companies that we're talking to who are looking at new financing rounds, we're talking to them about really looking at having 24 months or raising capital for 24-month funding runway as opposed to 12 to 18 months, which was what we were looking at previously. So again, right now, the main idea is close communication and keeping an eye on companies' cash positions. As Betty mentioned earlier, we are fully deployed from fund number 1, and as we're transitioning over from the portfolio of deployment to managing the companies, we've really increased our technical assistance supports to the companies. And in the first quarter, as evidence, in the first quarter, we brought on Samalit Hogan, who's really helping to assist the portfolio companies with that technical assistance piece. Again, this was just a quick highlight on the portfolio companies. If there are any direct questions, I can take them right now, or we can talk about that a little bit later. Okay, well, seeing none, and feel free if you do think of any questions to drop them in the chat later on. We wanted.
And Henry, for our investors on the call, we
Yes.
will have our data sheet,
Yes.
our June 30th Q2 data sheet coming out later in July. So we'll share that by email. And we will plan on doing another update later in the fall once we have more of that information. So, but if you'd like any other info, please feel free to reach out to Henry directly, and I would love to see any questions that you guys have, either on the impact report, on the portfolio. Were you going to say one more thing, Henry?
No, that was about it. I was going to transition over to, Deborah, and talking a little bit about some of the things that we're doing with the cohort and advisory work and card deck and things of that nature. I know that we touched on it before, but there was
Yeah.
Amy, I see a question.
Hi, good to see you all and hear about the great progress. I'm wondering, now in your portfolio, you've had businesses who've had to pivot through COVID and now through a possible recession. Like, what are you learning about how to select and support businesses in these very unusual times?
Great question. It's a popular saying, anything that can go wrong will go wrong. And we've really, the idea is really to start building in resilience with the companies and helping entrepreneurs, some of them new, some of them more seasoned, with their projections and with their expectations, and really building in cushion from the very beginning, so that as they're developing their businesses, as they're growing, take advantage of the good times, but also keep in mind that there are crises that can come up, and as COVID has shown us, will come up. Right now, in this inflationary environment, right now, a lot of our companies are on the end where they have been able to benefit briefly by increasing their prices and have not had that affect them yet. But within the next few quarters, we do see that imbalance will fix itself, and then they will now have to carry the higher prices themselves. So again, our companies right now are really looking at their cash positions and trying to make sure that they can weather some of that downturn.
Amy, the other thing that I'm noticing, and again, I had started with BII and the investment committee back in 2018. So sort of seeing a bit of this evolution, and I would say that there is so much need for what I would call the knowledge and social capital side of what we call integrated capital, right? So there's just so much financial capital can do. It's more support in terms of resources, connection, building the knowledge of the business owner around what drives their business. But sometimes it's just, they might need support with addressing a difficult landlord right now, right? Or a vendor, right, that is just not responding to them, or is giving them, is challenging them with their contracts. So it's a lot more technical assistance and business support. And then it's also opening up the door to experts, advisors, resources that they can tap into to move their business along faster, right? We talk about like having political capital and us leveraging that. That's a lot of where I'm seeing us bring more to bear, right? As we shift in Fund 1 from investing to now portfolio support and maintenance. There's going to be more of a need for that. And then in Fund 2, I would say, similarly, because we, I should have said this, the other differentiator in Fund 2 is Fund 1 was more of a debt fund, right? It had, we deployed approximately 75% of our capital into the debt side, loans, lines of credit, receivable, royalty financing, and about 25% into equity investments. And what we see now is there's a real need for equity capital in our businesses, like for follow-on, but also some of the companies that we're looking to invest in now that hit that thesis that we talked about need patient long-term capital. And it's just not available through community lenders, for example, or community-based capital allocators, right? There's a lot of debt in the ecosystem, but very little equity capital. So our second fund is going to flip that ratio. Our goal is to deploy 75% in equity type investing and 25% debt because companies still need debt because it's still an integrated capital fund, blended capital. So that's another shift, and we're gonna, because we want to always support ownership in these companies, support workers and owners, and try to give as much of our or have them retain enough equity in their businesses. We're structuring some of our deals with an early exit so that entrepreneur, once that business becomes stable, cash flow positive, they're able to buy back that equity stake. So we're also, structuring some of those investments that way so that we can continue to build ownership and power in communities of color. Hope
Thank you.
that helps. Yeah. Other questions? Are you guys excited? I'd love to ask you a question. As we've shared a little bit about the second fund and the doubling down on this power building theme, any thoughts? Any questions, concerns? Do you like it?
I'll come off mic and just ask a question about the equity portion of it because, Kepler, and just to let everybody know, Kepler Institute went through the BII cohort for 18 months and we're launching an integrated fund, and we're interested in equity, but we're interested in the context of how community people can participate more. And I'm wondering if y'all figured out a way to address that.
So if I'm hearing you, Pambana, is how can community investors participate in building equity?
Or how community people can be investors. Yeah, I mean,
Yeah.
don't make a lot of money because typically the people that can invest have a lot of money already and they usually get the biggest returns. And I know, in the context of how you structured yours and Boston Ujima, there's been an attempt to flip that and we're looking at that too, but just wondering how y'all plan to approach the equity aspect of it so that people who don't have a lot of money can still be investors, or if you've even looked at that.
Yeah, so such a great question. So similar to our first fund, so in BII Fund 1, we had our first layer of notes were community notes, and those were aimed to non-accredited investors. And that was a way to create a way for people to participate, right, that normally don't get the ability to participate in investment funds. I think the minimum for the first fund was $2,000, right, so that you can invest in BI's fund, and it was a 3% note for 3 years. And the interest was paid annually. So most of those notes have been repaid at this point, and that was a way to garner community participation. In the second fund, we will also have community notes available, and those are targeted to non-accredited investors. And one of our goals, I think this is a question in the chat, one of our goals is to increase the number of investors of color. So as personally, as an investor of color, what I've seen is a lot of folks wanting to support funds like BII and Ujima and others, but there hadn't been many, right, available, or if there were, you didn't know how to participate. You had to be accredited, right? So this is unique to BII and funds like it in that we're able to offer notes to non-accredited investors, right? These are individuals that make less than $200,000 in annual income or have a net worth of over $1 million. So individuals that don't meet that securities law definition, but yet are sophisticated enough to understand, right, the kind of investment that they're making. And so we're excited. I'm personally excited about the ability to do that. And without getting into all the terms, because I don't want to violate securities law here, but it will be a note with an interest rate and the ability to potentially participate in any profits in the fund, which is a new unique thing for this note holder class. So that's the way we're doing it, Pambana. I hope that answers your question. And funds like, Ujima have made it very accessible to invest. I think their minimum threshold is $50, I believe. Something
Yeah,
along those
and
lines?
I'll just add in on, I mean, I think Pramada, one of the things is because we and Ujima were sister funds, we set different minimums for non-accredited investors, for community investors, so that Ujima would go and do the direct to individual, and we would do the non-accredited institution. So in Fund 1, it was a $2,000 minimum for us, meaning like churches, for example, that are non-accredited. In our next fund, the minimum for non-accredited will be 1,000. So it's still not accessible for like a $25, $50 participant, but it's more accessible at the $1,000 level, and Ujima is still here. And so this is one of the ways that we partner. If we were alone in our community, I think we'd be looking at a lower minimum.
So thank you, Deborah. I'm going to go through some of the questions. So Henry, this one is from Shaka around, do you see that question? Delay in CapEx.
Zach's answered it, and it's
Yeah,
really
yeah. Thank you, Henry.
Okay. Rose, your question around how we're engaging with the new majority from an investor. I just talked about the community notes. That will be a specific outreach to potential investors of color and others to participate in the new fund. But as far as us building our pipeline and entrepreneurs that we're investing in, we've always done our work in relationship with other partners that work closely with entrepreneurs. So we get a lot of referrals, but as part of the new fund launch, we're going to be partnering up in a much more deeper way with accelerator programs, business service organizations, TA providers that specifically work with entrepreneurs of color, not just in Massachusetts, but in other communities. Like Zach is in upstate New York. He's building relationships with incubators and accelerators that are supporting entrepreneurs of color specifically. And then through other relationships, we're doing that here in the New England region. And part of it is a much more intentional partner strategy where we're going to become a financing partner or one of the financing partners to some of these programs. So that's one of the ways that we're going to be building the outreach and the pipeline building so that we can continue to focus on entrepreneurs of color that are doing amazing things. There's also a university strategy, right? There's a lot of great companies coming out of the higher ed space. All right, next question was, let's see, do we collaborate with Blue Hub Capital, form of syndication? Yes, do you want to take that, Henry?
So yes, I briefly answered that in the chat. Yes, we are in
Oh,
conversation.
sorry, you guys, I'm not, yeah, I can't
No,
follow the
fine.
chat.
That's fine, because I wanted to add a little to that. So yes, we are in partnership with Blue Hub and other CDFI lenders, both for deal syndication, where we're in the same tranche, but also where we are looking at different tranches of the same transaction to help make the deal work, understanding that we have different levels of risk tolerance or different expectations for returns and things of that nature. So yes to the question, and in different ways we are working with, with the partners, especially around that real estate bent or the real estate leaning for the new fund.
Great. Pambana, you had your hand raised again. Is it the question in the chat?
Yes, it's the question in the chat.
So 1K versus 2K, no function of SEC regulations. So no, I think we went to 1K again to create more accessibility, right? So when we thought about who do we want to bring into this second fund, we are very encouraged and want to create as much accessibility to people of color, investors of color. So we lowered the threshold a little bit more. But we didn't feel comfortable going as low as, say, the 50 because of what Deborah talked about. Boston Ujima is one of our supported organizations and partners, and we'll be focusing more on individuals, but also more institutional organizations that are community-based for that community no-holder tranche.
But there's a second reason, and this is relevant for you all, which is data management. You know, as you
That's right.
have larger numbers of investors, you have more, and you are regulated and required to maintain their contact information every year. So it's a question of just how many individual note holders is your system set up to manage. So the lower your number, the more you'll have, which is fantastic. And then you have a data management question. So it's just a question of the platform.
Right. Because remember, you're communicating annually with them, right? You have to send statements out to them. So if you have, 500 versus 100, it's a huge difference. So that was one of the considerations.
So basically, the smaller the investor, the more cost you potentially acquire through the data management piece.
Definitely.
Yes.
Okay, thank you.
Yeah. One more, Andrew. So you asked, what might we funder a crowdfunding? Oh, such a good question.
Can't do a
We
fund.
can't. It's those securities laws. Yes.
You can only do an individual project. You cannot do a fund. We've been trying to figure that out.
There's a little law called the 1940 Investment Act that causes a bit of an issue.
So the crowdfunding platforms have worked their way around that in the case of an individual enterprise or project finance, but not in fund financing.
Right.
So Deborah, just to follow up on that, like when y'all working with your entrepreneurs, they can do that for themselves, but a fund cannot do it for itself. Okay.
And without getting crazy technical and legal, Andrew, you raised how about a holding company? So yeah, there's something called a diversified business fund, right? But it has to be doing 60% of its assets have to be dedicated to something that's non-investing. So if you were an incubator, like a Mass Challenge, if Mass Challenge now wants to start a fund, they could, because most of their assets are allocated to the non-investing activity. So yeah, so we're working with lawyers. I mean, part of BII's work too is innovating in the space and challenging law, challenging, current legal structures. And so if we discover something new, we will definitely be putting that out into the universe and encouraging others to try it. But yeah, it is a bit of a challenge with the way the Investment Act works.
Betty, I want to follow up on that to see if I understood what you said, because we're a nonprofit organization that's starting a fund. And if we wanted to do crowdfunding or create, what is this business thing that y'all just mentioned? As long as the majority of our focus was in another area, does it have to be in terms of revenue and dollars or just focus?
Assets. It's your assets, right? So we've talked about this. The reason that you guys are going down the charitable loan fund route is this diversified business thing. Is if somebody had an accelerator program like Benjamin in Dallas, and he had a $5 million building, let's make it a $6 million building, then he couldn't raise a $10 million fund. 60% of his assets have to be in something that aren't the fund. So if you want to do a $10 million fund, then whatever that multiple is. So that's why it's not appropriate. The assets have to be much, much bigger than the fund.
Okay, thank you.
Yeah.
I have a question.
Yes.
Hi there. My name's Vanessa Lowe. Thank you so much for being there. I'm involved with the Unitarian Universalist Association. I believe we invested in y'all back in 2019 and very excited about the second fund. Not to continue going down the rabbit hole of sort of other resources, but I want to make sure and find out if you are aware that the EDA, the Economic Development Administration, has just released its newest fund that is, they're saying it's very much more focused on equity. And so the Build to Scale program, which supports programs that are essentially supporting small business programs like you are, but also 2 new programs focused on really trying to support Black entrepreneurs and other people of color entrepreneurs. So if it's not on your radar, eda.gov for you all and those who may be on the line and interested.
That's great. Thank you for highlighting that. I had heard of it, and I will look it up to get more information. So the great thing, because of the work that I mentioned earlier, being part of this coalition for an equitable economy, what's wonderful is that amongst community investors and others, we're collaborating a lot more because
Great.
as you know, many of these transactions can't be done by one single investor. They often require syndication or co-investment. And so we're always looking to broaden and deepen our partnerships with other investors that are mission aligned. So this is great. We'll look into it.
Wonderful. And I'll
Yeah.
follow up separately. Thank you.
Great.
Thank you for your work.
Appreciate it. Other questions? These are great. Did I cover everything in the chat, Aliana? I think I did. Yeah. All right. Well, listen, if there isn't anything else, you can always reach out to us. Yes, the video will be available. We'll share that in a follow-up email. We thank you for joining us this afternoon and spending a little bit of time. Thank you, Aliana, for sharing more about the impact of the investments and what we're doing and just the rigor of the data collection that you do and the storytelling, which I really enjoyed. And Henry, thank you for the update. It's always great to see you. We will be sharing more. We will hound you with our emails. And a few of you have given me your email in the chat if you're specifically interested in Fund 2, but we will be reaching out anyway. So thank you again for joining us, and I wish you a wonderful afternoon.
Hey, and did you say we'll get the recording too to share?
Yes, we'll
Thank
send
you.
it out, Pambana.
Okay.
Thank you.